Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a new lender, a new rate. 3.49 is the interest rate. This is a great rate that I want to share with you. There are some fees involved in it, but it could be an option for a number of people that watch this channel. Now, rates have been really moving down in the last few weeks, and a lot of people's belief is that it's because of the Bank of England. Partially, it's not totally because of the Bank of England. You see, interest rates have gone up 14 consecutive times at the Bank of England meetings. We went from pretty much zero interest rates to 5.25%. And that was because inflation was higher than 11% for a period of time. Although some people will say the real number was significantly higher than that. Whatever it was, inflation was painful, particularly for people on low income. So the bank acted in order to bring that inflation down. That's now got down to its 2% target. And so now the Bank of England has dropped rates from 5.25% to 5%. So how are lenders able to lend money at lower than the Bank of England rate? Well, a lender will borrow from a bigger lender. So Barclays Bank will borrow from someone like JP Morgan. JP Morgan will give them a rate off something called the SONIA swap rate. Now that's actually lower than the Bank of England rate, and that's been a little moving a little bit lower over the last few weeks and allowed banks to cut their rates. But the primary reason they did that was because business has been quiet. So in December of 2023, transaction volume dropped off a cliff. It went really, really quiet. And so the banks got together and they started cutting mortgage interest rates. That meant in January, February and March of 2024, the market started to get busy again. And what they wanted to happen, happened. They wanted to get lending. They wanted people like you and me to start going into the market, remortgaging, buying properties and doing transactions. And that's what happened. Then they started creeping those rates back up a little bit again. And so the market slowed down in May, June and July. It was a little bit quieter as well. So they've started cutting rates again. Now, because the Bank of England's dropped, the SONIA swap rates dropped, that meant it was a little easier for them to drop rates this time. And they've been able to drop rates a bit lower than they did at the start of this year. So in this video, I want to talk about a big lender and who you can look at and see if they could be any good for you. But before we jump into that, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We've got new content every single day on the property news, investments and what's going on in the market. And while you're here, smash like, tickle like, do something to that like button, guys. That really helps me with the YouTube algorithm. So who is this lender that we're talking about? It's the Mortgage Works. Now, the Mortgage Works is often the cheapest buy-to-let lender. They often have very, very good deals. They're part of Nationwide. So Nationwide have also got some of the best residential deals at the moment. That goes under the Nationwide brand. Buy-to-let goes under the Mortgage Works brand. Now, this works for mortgages in your personal name, in a limited company name. The limited company ones might be slightly more expensive. Now, what's interesting is if you put this through a limited company, the fees are going to be a little bit higher on this one, but you can write those off against any tax that you potentially owe. So that's a consideration here as well. So let's look at their 2-year deal first and see how good is the 2-year deal. So the 2-year deal is the headline deal, and that is at 3.49%. The maximum loan to value is 65%. So you need a 35% deposit in that. And there are 3% fees in there as well. So the fees are fairly high. But if you look at that, that's 1.5% extra a year that you've got to put on your 3.49. So it's not a bad rate. Also, with a buy-to-let product, affordability is very important. So the bank will look at the affordability, but they're only looking at the affordability on this part, not the fees. So this will mean your monthly payment will be lower and it'll be easier to pass the affordability check. So that's a good thing. Let's look at the 5-year deal that they've got here now. So on a 5-year deal, they have got a rate of 4.59%, and the loan to value is 70%. So they'll lend you more money. Now, why would they lend you more money? Well, what they're saying here is in the short term, they think the market could dip and go back up. That's why they don't want to do small deposits on that. Longer term, they're more confident. Now, this one has a whacking great big fee. It's 5% on the fees there. So you've got to take all of that into account. Next, let's have a look at the next one. So they've got, is a limited company. Limited company on that one. That one is in your own personal name. Next is another 5-year deal that they've got, also for limited companies. This is a 5-year deal. It's 4.99%. Now, look, when you look at buy-to-let companies, this is not a bad rate. The fees are 3% on that one, and they'll lend you 75% loan to value on that one. So higher monthly payments, lower fees. So it really depends on the value of the property on that one. So that's one to consider. Remember, any limited company mortgage at the moment has much higher rates because there's a lot less lenders that do this, and you can deduct a lot of the expenses anyway. So that's good. Next and last is a limited company deal. Again, this is a 2-year deal that they've got here. The rate is 4.94%, and they will lend you 75% of the value, and there are 3% fees as well. So Mortgage Works likes to get the headline rates. This one here is not a bad rate, in my opinion. I think if you could get that rate, it just reduces your monthly payments, it gets your cash flow good. Even with the fee, it's worth looking at. You're not in this market at the moment because a lot of you want to get a 3.49% deal with £500 fees. That isn't in the market at the moment. The market isn't slow enough for that. The SONIA swap rate that they borrow from and the Bank of England rate aren't low enough to justify that at the moment. You'll be waiting at least a year or longer for that kind of rate. So rates are definitely moving in the right direction. 3.49 is not a bad rate and something you should look at and consider when looking around. Have you seen any rates that are better than this? Because rates are moving so fast at the moment. Every time I do a search, there is a new lender with a new headline rate. And what they're trying to do is compete with each other, get the publicity, get the headlines. As soon as you drop a rate below 4%, the media pick it up and it gives them loads of free marketing. So there'll be some more of these coming along the way. So do let me know if there's any lenders that I should check out. Do subscribe and hit the bell. Do check out all the other content on my channel, including this video right here.